Well, SoFi is down 28% for the year, and just in the past month, it's down almost 20% despite great earnings, great guidance, and turning profitable. What the heck is going on with this stock? I mean, why is it headed in the opposite direction of the company itself? And are we missing something massive that the smart money knows that we just don't? Well, let's answer those questions today and exactly what to do in this particular situation, because you're going to encounter it with any stock that you own at some point in time. This will happen sooner or later, so you need to know how to handle it. Just make sure you like the video if you like getting the truth without the hype. And make sure you check out the pinned comment down there for my new channel where we talk about financial freedom and retiring early. That's all the content we talk about over there, so check out the pinned comment down there. All right, so there are three big reasons why SoFi is trading down. We'll talk about each one of those. Actually, the last one's pretty much the biggest one, the biggest reason why. And then we'll jump over into exactly how to handle it, because if you don't know how to handle this situation, you're going to miss out on massive opportunity. So I'm going to show you exactly how to take advantage of that as well. So the first reason why it's so low is downgrades galore. I don't care about these at all, but unfortunately traders do. So to me, in the short term, it kind of means something, but not really in terms of the long term, in terms of what's there, because you got to understand the game that these downgrades are playing. First off, they're being told what to do based upon their whatever. The guy's telling them what to do there in terms of what to write, what to upgrade, what to downgrade, and stuff like that. All has much more to do with what the firm's doing in the background in terms of trading than what actual analysis is going on with the company itself. Only thing it maybe tells me that I'll give them a little bit of credit for is that it tells me the momentum of the stock, which direction the momentum is going, which obviously with SoFi's it's going down, but you got to keep in mind, they are usually very late to the party. And what I mean by that is, hey, everybody's piling on right now with downgrades. Okay, I got it. The momentum's down. I could see that from a mile away. But whenever it goes up and the momentum starts going the opposite direction, these guys won't start upgrading until it gets up $8, $9 or so, maybe even more, maybe even $10 before the upgrades start coming and they start saying, oh, now it's a $14 stock, $15 stock. That's how behind these guys usually are. So for me, means absolutely zero, means nothing to the long term. But in regards to it trading down, makes sense. And one of the reasons why is because of those downgrades. Number two, they're still taking a hit for the convertible notes. Now, this one right here was a huge positive for me. Check out this video right up here for all the details. I'm not going to get into the details again in this video. That one up there has the full breakdown of all of it. But for me, it's complex, but it was a hugely positive thing for SoFi over the next year plus or more. Now, some folks don't like it. Some folks just, honest to God, didn't do the math in the first place. And it's, again, you got to do a little bit more digging and a lot more reading in order to understand that. And a lot of Wall Street traders don't do that. I know that seems kind of funny. It seems kind of odd. Hey, these guys are the pros. Shouldn't they be doing that? Yeah, you would think, but that's not what they're doing. They're looking for trades. And a lot of times the trades happen fast and the movement happens fast. And that's what happens in these particular scenarios. They don't take time to deeply understand, to kind of extrapolate out the impacts of these particular instances and convertible notes and things of that nature. They just basically saw the headlines, saw the algorithms, do whatever the heck the algorithms are going to do, and they traded and then they moved on from it. And that's the most amount of thought that they put into it. Seems stupid, seems silly. Guys, it's Wall Street. We have seen stupidity on the highest level over and over and over again on our journey on this channel. So there's no reason why that should be shocking to any of us. They get dumb. That's what happens. But this is weighing, as some just don't like it in general. And on to the final reason, and it's the biggest reason why SoFi is down, beaten down as low as it is right now, and why it can't seem to gain any traction. So number three would be the stock is still trader controlled. So what does that mean exactly? I know some of you guys know it, I got it, but we got some folks on here that don't know specifically what I mean by that. And what I mean by that is when a stock is more speculative, basically pre-profitable, before they turn profitable, they are trader controlled. Big institutions don't get involved in those type stocks typically. They don't have any interest in things of that nature. So the traders control those stocks. That's why you see the wild movements, 200% move up, then a 50% crash down, and all kinds of wildness in between. That's what happens because the stocks are trader controlled. Now, I already hear you saying, hey, but Luke, they turned profitable. What's the deal with that? Why is it still trader controlled? Guys, the flip does not switch overnight. You don't just go from here, I'm not profitable. Oh, earnings come out, bang. Now all of a sudden they're profitable, traders all go away, and all the institutional buyers come in and buy. It's not how it works at all. I wish that it was. That would be awesome. That would be wonderful. But that is not the reality of the stock market itself and how it works. Once you turn that profitability knob, sure, it means that some funds will start buying your stock now that you are profitable. Some funds want to see 4 quarters of profitable quarters before they buy in. Some wait until you hit the S&P before they actually buy in. And some wait until you hit the S&P and then you have another 4 quarters before they buy in. So this journey from trader controlled all the way over here to being more institutional controlled and being much more of a normal type stock and not trader controlled anymore can take, a year at the fastest. But generally speaking, it's a few years for all those trader controlled stocks as they're trading and doing their thing to be gobbled up by institutions and larger investors that are looking to more or less hold the stock. That journey takes time. So for right now, SOFI is firmly trader controlled and it will be for probably the next year or so. So we need to understand that. Doesn't mean that it can't rocket up, right? I mean, we saw Palantir, even though they were trader controlled, man, the traders just kept trading it up, right? It just went from 10 to 15 to 20, now finally cooling off here a little bit, but man, it was a rocket ship up with that particular stock. Will that happen with SOFI? Nobody knows at this stage. But what I do know is that it is still trader controlled. And that is why we're seeing moves like this that make absolutely no sense. Traders don't care about the fundamentals. They don't care about profitability. They're playing a completely different game altogether. And that's why it makes no sense. So how exactly do you handle this situation? Now, I do 3 things every time this situation comes up. But I'm telling you right now, I'm assuming that you've already done your due diligence. You already have a valuation and you already have price targets. I'm already assuming that. If you don't have that, then you need to do that. That's kind of the 4th thing you need to do. Which if you want coaching on doing exactly that, you want to take 5 courses for free that teach you that and have direct access to me and have me and the other 6, 7, and 8-figure investors in my group helping you as well do exactly those things. Make sure you take advantage of the sale before it ends, where we give you all of that, plus a stock analyzer tool, the best 6, 7, and 8-figure Discord out there. I put out 3, 4, 5 videos a week in there. There's so much, guys. Check out the pinned comment and see if a membership's right for you before the sale expires. My group can absolutely help out with all of that. So once you have that and it's out of the way and you have your due diligence, your price targets, and all that sort of stuff, these are the 3 things that I do in this situation every time. First is ignore the noise. Don't let fear set in when the stock price is falling. Listen to the earnings call instead and look at the financials and see what's actually going on with the company. I don't need opinions on what's going on. I need facts on what's going on. And you only get that through the earnings call and through the actual earnings releases from the company themselves. Everything else is opinion set to whatever the heck the agenda is of the folks giving out that opinion. And if you think that has your best interest in mind or what the company is actually doing or anything else like that, you are sorely mistaken. That's why I don't listen to it. That's why I don't watch a lot of YouTube, if any, and I don't watch any news media whatsoever or read any of the other articles that are out there or anything else like that. I get all that I need in the earnings and I just ignore the noise. Second, I buy the dip. I know it's not popular to say right now after all the disaster that was 2021 and all that good mess, but that's all that I simply do. Once I understand what I own, I've done my due diligence, and the stock has come down and it's getting beaten down for no good reason. Fundamentals are looking great, but the stock price is down. Again, stock price and the company itself sometimes decouple. Actually, a lot of the times they decouple. I just simply start executing my plan and I buy the dip, whether that's at a price target, whether that's just executing a simple DCA, it doesn't matter. I simply buy the dip every time that this happens with stocks that I want to own that are performing wonderfully underneath like SOFI is. And this last one here is the most important, guys. Just ignore everything else in this video. If I can tailor it all down to this one spot right here in the end, over the long run, you got to do this 3rd one right here. So the 3rd one is, make sure you have all the shares that you want. I'm not trying to say SOFI is the same as Palantir, but it's the most recent example of a retail favorite stock where so many folks do not have all the shares that they want of that stock. And now they're forced to pay much higher prices than they should have had to pay because they listened to the fear, they listened to all the other stuff that went on and kind of basically didn't do the things that we just talked about right here when opportunity comes. Maybe they thought the opportunity was going to take longer, right? They thought, hey, I got another year to buy this stock. Well, guess what? You didn't have another year to buy that stock at great prices. We had more than a year of buying Palantir under $10 per share. And at those bottoms, at those lows, I understand you couldn't buy all your shares then. I got that. But you had a full year that you could have piled money into Palantir. And yeah, there was times when it was $8, $9. There was other times when it was $6, $7. And no, that wasn't early on. You could do that as late as around this time last year. You could buy shares at that price in that $7 range. You have to take advantage when Wall Street gets dumb because you don't know when it's going to end. It might very well be a situation like PayPal where you get an extra year's worth of time where you can buy shares on the cheap, and other times it does like Meta where, hey, you got basically a 3 or 4 month window there to buy before it went on a rocket ship back up. You don't know the timing of any of that. Nobody knows. All I know is you want to gobble up all the shares that you want, get yourself into those bonus shares when the stock is cheap. Trust me, that's a much better spot than all the folks right now who are unfortunately having to fill out their Palantir positions at much higher prices because they waited. And if you want to see me execute on buys in SOFI and a lot of other stocks in real time and see my complete watch list complete with price targets, you want to take 5 courses for free, take advantage of our free coaching, take advantage of the 6, 7, and 8-figure Discord members out there helping you become a better investor, and so much more. Make sure you check out the pinned comment, take advantage of the sale before the sale ends forever. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.